Now we are going to build a simple sample strategy. This is going to show you the process of trial and error that a trader must go through when developing his or her own strategy. So what you'll see here is I grabbed a few indicators that I think will work well for our strategy. You'll notice we've got the RSI down here and Bollinger Bands applied to the price above. So what we're going to do here is a simple trading strategy is we are going to say that if price closes outside of the Bollinger Bands as well as extends past these levels on the RSI, we have a very stretched price and we will try to trade it back in the direction that it came from. So this is going to be a counter trend trading example. Like we showed you earlier, there are trading strategies that go with the trend, such as the moving average crossover and breakout trading, but this will be an example of a counter trend trade. So first, what we'll do is we're going to use this vertical line to look for our setup. And I'll show you an example of what our setup is. Notice here, price did close below our Bollinger Band, but we didn't quite have an extension on the RSI saying oversold. Even though it would have been a great trade, we did not take that one because it did not fit our plan. Here, though, you'll see that we had an overbought indication on the RSI. Notice we're also using the RSI 4 period rather than the default 14. This is much faster and will give us more extensive readings on the shorter term, but it can be useful for getting in and out of trades quicker. So you'll notice we had an extension that closed above the Bollinger Band's upper band, as well as an overbought indication on the RSI. This would be a case that we would take a short position. So we would take a short position here, and our target could be one of two places in this strategy. But for simplicity, I'm going to make our target the middle Bollinger Band. Some traders prefer to use the Bollinger Band, the lower Bollinger Band as an exit tool, but I'm going to use just the middle band. This is really going to be a simple scalp on the counter trend side. So when we have this bar close, on the very next bar, we're going to take a short position. So you can see we took a little bit of heat on the trade, but eventually rolled over and made a nice profit, and that is roughly 666 points, which is about 67 pips. So again, we did not close below here, so we did not take a trade. We did not close here, but we did close here. And what we'll see is on the RSI, we also had an indication that it was overbought. So again, we would have taken another sell trade. So on the very next bar, we would open a position short. And in this case, if we were going for the middle Bollinger Band, we would have had a 113 pip gain. So let's go ahead and find another one. Here we didn't close below. We did get a stab through the lower Bollinger Band, but we didn't quite close. And our strategy is only when it closes below. Here's one where we took a little bit more heat on the trade. You'll see we closed above the upper Bollinger Band, indicating that we would have taken a short position. As you'll notice, down below, we also had an overbought reading on the RSI. So in combination, that would have been a sell trade. And what we'll do here is we would have opened on the next position, and this would have gone against us a little bit. We had an 89 pip drawdown, if you remember that term from early in the course. If not, you should go back and review that. Essentially, the trade went against us, and we were down 89 pips at one point. But eventually the price rolled over and mean reverted back to this middle Bollinger Band, which gave us about a 20 pip gain. So we can go on and on doing this. This is a simple strategy that does very well in a choppy market or a sideways market. So that is something to keep in mind. Sometimes certain trading strategies will work better in certain market dynamics than others. So with that in mind, let's talk about how we can test our trading strategy. We're going to go ahead and get into that in the very next clip. How to test your strategy. Once you have a system, it is very important that you apply the concept of trial and error to your system and test to see how it holds up historically. What I mean by this is that once you've created an idea, for example, our past example of the Bollinger Bands and overextended RSI trading system, we need to take that idea and see how it actually does in the market over history. So this is what is called a back test. It is almost like an experiment. Once you have your strategy rules set up, you need to see how well those rules actually do. Now, a backtest does not necessarily mean that your strategy is going to succeed in the future, but it is definitely positive. The strategy performing well over a large sample of data in the past says that there is a good chance that in the future the strategy will continue to do well. This is a huge plus for trading your strategy because you'll have more confidence. For example, the algorithmic strategies that I run have backtests going back to about 1995, all the way back today, and they show positive edges in the market. You need your own system with an edge that is very clear over large sample point data. So to do this, how can we get started testing our system? Well, for one, if you do have programming experience, you can actually program your system in MetaTrader. I'll have a future course going on about all about expert advisors or automated trading systems, and these can be automatically backtested in MetaTrader 4. But assuming that you don't know how to code or you are not interested in finding a person to program your robot for you, you can test your strategy manually. Before I knew how to program in MetaTrader, I did this myself. So what you can do is take your strategy, just like we did on the previous video and took a look on the chart of examples. You can go back and manually, with a piece of paper and a pencil or an Excel spreadsheet, go back on the charts and test your strategy. Find where you would enter, find where you would exit, and go as many trades as you would like, or as many trades that you would feel comfortable with calling a backtest, and see how it does. So we showed you some previous example trades with our sample strategy. Now what you could do is take that same strategy or your own strategy, scroll way back on the chart, and painfully slowly go through and test how your strategy would go. I say painful because backtesting is not always fun. Sometimes it's very slow and it takes a lot of time. But this is an extremely necessary process for anybody who is serious about trading. You need to know if your strategy seems to work. Otherwise, why trade at all? You need to have a plan, and you need to have a plan that has a history of success. So with that said, one more thing that is imperative to having a well backtested strategy is that you have a lot of trades in your experiment. You can't just look at a strategy and see if it works 5 times, it must be a profitable strategy. Instead, you need to know about the best of times and the worst of times of your strategy. How much risk or leverage should you use in this strategy if you have a certain drawdown? For example, if you have a 20% drawdown at one point in your trading strategy, you should not exceed a bigger lot size or a bigger position size, because if you go with too big of a position size in this case, you run the risk of blowing up your account. So you need to know what is your strategy's weaknesses and what are its strengths. Does it trade in certain markets well? Does it trade poorly in certain markets well? If the market is highly trending, does your strategy do better or does it do worse? These are all examples of using trial and error and experimenting with your strategy to find your edge. Now, one other thing is that once you do find a strategy, a major pitfall for traders is they find a strategy that seems to be a profitable strategy and have an edge, but they ruin the edge because they let emotions get in the way of their trading. Once you have your strategy, it is imperative, like we mentioned earlier in the course, that you plan your trade and trade your plan. Experimenting and backtesting is planning your trade. Once your trade comes up on the chart, you need to trade your plan. These are some simple tips, but they actually make a world of a difference for traders. And testing your strategy and applying it as you tested it is extremely important in creating a successful trading career.